Barton, what multiple do you think Apple deserves to trade at right now?
Look, I think they're trading right now at about a 27 PE. They're getting close to my price target. I've had a buy rating on the shares this year. That's about 1.5 times the market multiple right now, which is on a relative basis peak, on the absolute basis not peak. But look, I think that I've been liking Apple. I think if there's some pullback, there's your opportunity to kind of pick up some more shares. You do have to be kind of valuation sensitive and environment sensitive. And there's a lot of treacherous things in the air right now that could trip these guys up on the report that we're hearing tonight. Weighing against that is they're making the best device in the most important area on the planet right now, which is smartphones. IDC numbers had them down only 2% in the March quarter in units, and the industry down 15%. That type of share gain for this important of a device, I think, will continue to pull people into Apple, as a relatively kind of durable play in an important area. But clearly, there's a lot of things in the air to worry about today.
And Ed, this is the quarter they open that store or those stores in India. So that if you're looking to pull people in, that's a big opportunity.
Well, they don't want to rely too much on China, right? So in the March quarter, we're looking, China opened back up, so that might probably help them.
Except for Estee Lauder, who had that, kind of face plant on the China exposure a little bit.
So opening up in India, I think, is crucial. Not just opening to the consumers there, but also manufacturing, right? So I think that's Tim Cook's way of saying, we really need to hedge against China. It's super important to them, but they need to find other ways in to expand their market.
All right, we have to talk Paramount with everybody here as well. The stock is down 27% today after missing on earnings and cutting its dividend. Berkshire, remember, is the largest stakeholder of Paramount. And last month, Becky Quick asked Warren Buffett about it. Take a listen.
It isn't fundamentally that good a business, whether it was producing movies and you've got some people that have got deep pockets that aren't going to quit. And the product they're offering people a chance to watch all those movies, for peanuts and all that. But can they raise prices? We'll find out. But so far, they haven't been able to. They've been able to attract subscribers, but they attract them at a terrible price.
All right, you gave a whole lot of reasons why not to buy Paramount. Why did you buy it?
Well, we'll see what happens.
That was like the best 5 seconds there. Why did you buy it? Ed, what would you say about that?
Well, I mean, I think it's a takeover target, obviously, right? I mean, it's got great intellectual property, decades and decades of library stuff. It just doesn't have the distribution. That's the problem, right? So in an industry where distribution is cratering, but you've got a lot of IP, an exit, basically, whether it's a Netflix or an Apple, for that matter, coming along looking for it, I think that's a possibility. Amazon.
Would Apple, Steve, be the buyer?
This happens all the time. People talk about, is Apple going to buy a studio? Disney is the one that constantly gets thrown about. It would be very surprising if they buy a studio like this. I'm not sure what the valuation, but it would easily be their biggest acquisition ever over when they bought Beats several years ago. So they usually don't have an appetite for buying this stuff this big. At the same time, if you want to talk about what they are going to spend their money on, sports rights seems to be what they're more interested in, Kelly. So
Absolutely.
those NBA rights are going to come up pretty soon.
The NBA one is the big, and it kind of fit Apple's whole ethos. I don't know. Barton, you can comment on that or on Paramount, whichever you think is less dangerous, I guess.
Well, look, I think they're connected. Look, I've got a sell rating on Paramount. I do think that the idea of someone buying them is, hope over substance in terms of a big tech company. They don't want the TV networks, the distribution. They don't want. They would take the content and put it on their own internet kind of platform. So, if you're just valuing it on the content library, I don't think it's something you want to own into a takeover. Moreover, Sherry doesn't want to sell because she sees an opportunity to improve the business, and I don't think they're ready to quit now, and she can call the shots there. So, I think it's a tough setup, and I think all of their cash flow comes from traditional pay TV, and that's very tethered to sports. And the issue here is that more of the sports rights are going to the tech companies that can afford the inflationary spiral that we're, going to continue to go through.
Absolutely.
So, if NBA goes to Apple, that's bad for everyone in pay TV, whether you have NBA rights or not.